right, traders. This is Blake Morrow. This TGIF first and foremost. Thank God, it's been a gnarly week. I mean, the volatility this week has been absolutely insane. I mean, you think about like what we've been through. It's like putting us through the ringer, right? I mean, I'll just take you to the Dow futures. I don't have to go to the E-minis. They look basically the same. This is what our week has looked like. I mean, since Friday of last week. I mean, this is a very tough and challenging market to navigate. Anybody who tells you it's not is lying. It is a very, very difficult market to navigate. I know plenty of people that have gotten just whipped around all week. You think you got a trend developed, and then, then it craps the bed. Then you think you got another trend, developing, and then it rallies on you. I mean, it's just, look at this, look at the price action. I mean, that's like a meat grinder. Now, I've been through plenty of nasty markets in my life. Plenty of them look like this, but I know when they do look like this, it's a really tough environment. And I think we need to be really careful today, just in general. The reason why we need to be really careful today is because it is triple witching, right? So it's is it quad or triple? I think it's triple, right? Is that triple? Triple? Or is it quadruple? Quadruple. Okay, it's quadruple. Okay, so it's going to be a friggin' crazy day in the market, any which way you slice it. Then on top of that, it is Friday. Okay, think about the volatility we've seen this week, and if you just go to a weekly chart. This is the volatility it's been this week following last Thursday, Friday. I mean, that in itself is concerning to institutions and asset managers right now. They're probably looking at the market going, Jesus, we weren't able to get a bounce this week, and everybody's pretty accustomed to, just, you guys have heard me say it before, we buy the dip, we sell the rally. We buy the dip, we sell the rally. We buy the dips, we sell the rally. We buy the dip, we sell the rally. We buy the dips, we make money. We buy the dips and we sell rallies, and we just keep buying dips and we keep selling rallies, and we make money every single time. It's so easy, and we just keep buying dips, sell rallies, buy dip, sell rally. And when that stops working, then you've got people go, oh crap, this whole buy the dip, sell the rally, technique we've been doing for so long, it's not following through. So once you get to a Friday, people go, well, I don't know if I want to hold on to my positions going into next week. And everybody, I can pretty much guarantee you, every desk right now is manned by traders with fingers on the button. Every single one of them, they're just sitting there, thinking, okay, I'm not going to pull the trigger first. You pull the trigger, I'm waiting for that clue. And the thing is if you start getting, if you start seeing the market push, it could accelerate, being that it's a Friday, being that it's options expiration. So you just got to be really, really careful. Another thing that we got to be really careful about is gold. Gold is really close to support. Like I said this morning, if you want to take a long, this is your spot. If you want to take a long, you take a long and you put your stops below, the lows below 1305, whatever it is. That's the risk reward trade, is to be long gold right now. Now, I don't necessarily believe that's the right trade. I'm just saying that is the risk reward trade. You have to be in the camp that if you get stopped out, you need to be able to stop and reverse, because my 2 cents are, if we take out this trend line, we take out 1305, 1305, 1303, somewhere around there, it's going to get downright nasty. I mean, this is all of 2016. It was a trend line the whole year, okay? And I was looking at this weekly chart, and look at the weekly RSI. So one of the things that, and I'm sorry, I got to get into the charts here in just a second. I'm going to teach you something that I've learned over the years. RSI is a really neat tool. It tells us when things are overbought. tells us when things are oversold. It helps us, identify divergent moves where, moves are happening without much strength. Um, or in this case, when you have, here, let me pull this up so you can really see. All right, you see relative strength down here? Do you notice how relative strength is cracking what I would call support? Just like if I was drawing it like on a normal chart. See how it's cracking through support, but gold hasn't broken? A lot of times, and I'll say more times than not, that's a leading indicator. So what that RSI is telling us is that eventually gold is going to break down. Now again, we're looking at a weekly chart. So does that mean it's right now within the next 30 minutes? No. Does that mean it, is it in the next day? Not necessarily. But that weekly RSI rolling over like that, and price hasn't, that means that price is going to follow. It just hasn't done so yet, and more likely than not. Now, again, it's not one of those things where you go, oh God, it happens every time. I'm just gonna, nothing happens every time. Nothing in the market happens every time. But it's one of those things that if you were long, you better be looking at that chart and you better be thinking, I got to be really careful here on the long side, because in my opinion, I think at any moment now, selling could hit gold really fast and put a hurt on people that are long at any moment. But doesn't mean it has happened today. It could be, tomorrow or Sunday, Monday, Tuesday, whatever. Okay. Anyway, let's go into our charts, and let's do our analysis of our currency. So, as you guys know, the euro, I'm sure you know, the euro's closing in on some pretty key support. Brian asked, does RSI usually lead the move in gold in this case? Yeah, that's what I'm trying to get at. There's a good chance that it could break down based on what we're seeing in that RSI. Okay. All right. Now, here is the euro. Okay, so we've been looking at this chart all week, and I have to say I'm really happy that I have not been trading the euro all week. I mean, I've been trading other things, which doesn't necessarily make it the right things to trade, but I'll tell you, I'm excited I haven't been trading the euro, because really there's been nothing to do. All right, there really hasn't. Now, if you just take this low right here over to the high, you also know that's a 618. So that's how important that 112 is. Whoops. Okay, I can grab my coffee too. Hold on. It took me forever to get to bed last night. It was like, one of those nights where you're like, oh, I need to go to sleep. 2 hours later, you're like, all right, I'm still not asleep. That was me last night. 112.85 is resistance, right? It's right there. Okay, and they're both key. That's why I put an asterisk there. Key. We're in a range. Okay. Pound. Pound's getting destroyed today. Now, if you don't know why the pound's getting hit, there are some comments this morning regarding the pound. It was BOE Forbes says sterling depreciation since Brexit vote is leading to some automatic adjustments in UK current account. I don't know if that's what really put the kibosh on the pound, but the pound really has been under pressure all day. But if you look at the cable, the cable, if you don't know why I put bearish every single day on the pound, it's because, we are consolidating below 135, and a lot of people argue, hey, maybe the Brexit's not going to happen, maybe it's not, maybe, Article 50 is never going to be invoked. Well, listen, that's all speculation, and right now, as we know it, the pound hasn't gone through even the process, right? So just the uncertainty alone in the cable, I think is warrants being extremely cautious with your bullish argument. That's why I've kept it bearish for well, ever since we broke below 135. You know, we're consolidating at 30-year lows. This isn't like, you know, you look at a monthly chart. This isn't, and I have other charts that will go back further than this. We're at 30-year lows. I mean, you know, it's not like we're consolidating mid-range somewhere and we go, okay, well, that was the Brexit. We're going to get past it, and we're going to move on. No, we are consolidating at levels that some of you that are trading right now, you weren't even alive when we were at these prices last. You know, look, I'm in my 40s, and we're at levels that we hadn't been since I was in the 70s. You know, so that's a bearish sign, guys. It's not like if the pound was such a good deal right now, and I always think about this when I'm trading, if the pound was such a good deal right now, it would be bought. You get when things are a good buy, you get V-shaped recoveries typically, especially after an event like a Brexit, okay, vote. You know, you get a V-shaped recovery. Oh, you know, oh my God, it was Brexit. Oh, that ain't going to be that bad for a Brexit. No, what we got right now is, oh my God, that was a Brexit vote. Okay, now what? Typically, when you get a sell-off consolidation, it's going to lead to another sell-off, more than likely. That's why when we're sitting here down below 135, it's very, very difficult for me to get bullish the cable. I mean, yes, I got a pound New Zealand long. It's underwater just a little bit, but it's not like I'm like, oh, I should be buying the cable right now. I'm not in that camp, and I'm very nervous about the pound because it really is, underperforming, generally speaking. Okay, now let's get rid of some of these charts. Let's go over to like a 4-hour. Okay, so here's the pound. Now, right at this moment in time, this could be a bullish Gartley. So just it might bounce today. It could from current levels. Okay. So, when you talk like a really intraday type of trade here, 127% extension, 786 retracement. This was in between a 618 and a 786. So, I mean, it is a, damn it, stop. It is a Gartley, which should lead to a bounce. Well, it could lead to a bounce, not should, it could. So, I mean, I'll write down the lows as support today. And then after that, we go down to 130, 130. So, 130, 130. Because, I mean, if it breaks 130, 130, we got 130, 160, right? Is that today's lows? Yeah. Okay. Because if we break today's lows, then more than likely it's a butterfly pattern, which means that we're probably going down here to minimum. Okay. Failed Gartley patterns turn into butterflies. So if we break this, we're going down here. So that's just some, more than likely, if it's staying with the harmonic theme. But we do have a Gartley right now, which may temporarily support. All right, resistance. I mean, we're looking at an hourly, so. All right. So resistance, even if we get a rally, I mean, key resistance is going to be right through here. 132.50, right? Okay, that'd be key resistance. Because it's trendline resistance on the way up, and it's also horizontal resistance. So even if we get a bounce, I mean, it's a severe bounce today, how much, any move up to 132.50 is probably a great place to be on the short side, I would think, if we can get up there. All right, let's go over to the Swissy. So the Swissy, oh, that's a Canadian. Sorry, I was like, man, I don't think the Swissy looked that bullish. So the Swissy got a nice reaction from support, right? See that? We're in the triangle, the Bermuda Triangle, and you could get lost in here. Don't think you can't. Damn it, stop it. Mother son of a biscuit. Thank you. God. 97.70. So 97.70, 97. It's the same triangle as the euro, right? Looks a little tighter. And you guys know, I mean, I'll reiterate, but I'll just make sure that you guys all know that if for some reason the dollar Swiss, especially going into next week, if we get above like this blue line, I'm going to get extremely bullish the dollar Swiss. Now that ain't happening today. That ain't even happening between now and next Wednesday, I don't think. But I'm just saying if it does, we're going a lot higher from there. All right. Okay. Dollar yen. So the dollar yen, I'm still long from 102.60. So just so you guys know, I haven't added. It's a small position. Um, you know, and as you all know, I'm going to get really bullish above here. Now, Paul doesn't seem to think that we're going to get above there, but look, I've made my case for why I'm bullish the dollar yen, and I haven't been bullish the dollar yen since we were at 120, since we were here. So basically, all of 2016, I think I've put bearish on this bias, and it will stay bearish, right? Just because I'm bullish right now doesn't mean I'm going to be biased either. Okay, I hope you guys can appreciate that. All right, being bullish, me personally, I like to try to catch turns, you know, when I think something's, you know, in the process of turning. And right now, I believe that the dollar yen is in the process of turning due to bonds. That just because I happen to be biased that way doesn't mean that the analysis will be. And I hope most of you appreciate that. I'm very clear when I say, hey, look, I'm long and I'm down, or I'm short and it's not really working out. You know, I'll say it. And right now, I'm long and it's not working out, but it's also a very small position. And I get, and as the blog said, if you go to Forex Analytics, this blog right here. By the way, we did add Aussie New Zealand to right here to Forex Analytics. But if you go over to the blog and you want to know the case of what I'm building with the dollar yen, why I'm getting bullish, it's this. Now it really has to break above 103.50 really to get super bullish. I mean, there's obviously more charts here. It's got to get above 103.50, and we're obviously not there yet. Now, the flip side is if we come breaking through the support 101.20, that's going to be extremely bearish. And there's a risk that we break down here because look, gold's not participating, and typically gold and the yen will have a pretty close relationship, meaning that meaning as gold goes down, um, you know, the yen will go down, so the dollar yen would actually rally here. But if gold bounces, then the dollar yen might actually slip a little here. Okay, but right here is the channel, I think, that you need to pay attention to. We're approaching channel support, which I'll say is the 88% retracement of this is 101.60, 101.60. Okay. Resistance. I think intraday resistance is pretty clear. I mean, you can just look at the hourly highs. I mean, to take some of this downside pressure off, we're going to have to get back above 102, 102.15. I mean, that's pretty clear to me. Here, I guess I'm going to delete this. Come on, you butt muncher. Yeah, I said butt muncher. You butt muncher. Muncher of butts. All right. Tastes good, butt muncher. All right. 102.15. Hey, what other Forex webinar can you listen to that uses the words butt muncher? None. Guaranteed. Guaranteed this is the only one. Guarantee it. Yep. That's right. Fat man. Batman. All right. Dollar yen. That was it. Canadian. All right, let's go look at the Canadian. Freaking bullish, man. Look at crude. Crude's getting close to, oh crap, why am I long crude territory? The dollar Canadian is getting close to 132, 132.40. And now, if you don't understand why this is a big deal, let's talk about it. Okay, let's talk about the issues here. Thank God I'm long some dollar Canadian too, because it's offsetting my New Zealand Canadian, which is, that's all I have to say is thank God I'm long this. So we have this cup and handle. Ahmad said my son said you're cool. Why? Because I said butt muncher. Sorry, kids. Earmuffs, kids. All right, so we have this cup and handle pattern. Still it's in process. We have a bull flag pattern that has not completely played out, but has not been invalidated because we've not been below 131.20. So 131.20 is support today. 1.3120. That's support. Resistance is 132. What's the spike high here? 132.53. So 132.50 really is, But you can see we're struggling as we get up there. You can see the spike up there from yesterday. We came within what, 15 pips. We went to 132.35. It's big. Big, huge, like Trump's hands, huge. It's huge. 132.15, key resistance. 132.50. I'm sorry, 132.50, key. We break that. I'm afraid all sorts of stops are going to get tripped. Okay, and if you're short, you will be wrong, at least in the very near term. All right, we are starting to turn bullish with the dollar Canadian. Remember, this is the setup. So if you guys don't understand the setup of the dollar Canadian, I'm gonna take you through a quick tour of why it's turning so bullish. Aside from crude oil being bearish. All right, we had this pennant. This yellow line wasn't there. No one was looking at it. Everybody was just looking at the blue lines. We had a pennant. We looked like we're breaking down. At that point, crude oil looked like it was going straight to 50. To 50, maybe even 60, and the Canadian started to gain some strength. What we drew down below is the multi-year trend line, and it stopped us on a dime when we hit that trend line. Crude also peaked at that point at like 48 or whatever it was, And now you got so many people that were so bullish the Canadian currency are now finding themselves on the wrong side. So now that we're up at 132.50, all the latecomers, the ones that were shorting at 130, the ones that were shorting at 129, we get above 132 and it's just going to destroy them. All right. And that's why a move above 132.50, I think could take us up towards like 135 in the coming weeks. Not necessarily tomorrow or today or anything like that. I think today, if we can break 132, 50, we might challenge 133, which would be this flag, just enough to stop everybody out, But we do have Canadian data today. Just I know it goes a little unnoticed, but we have manufacturing sales and foreign securities purchases. So we do have some Canadian data coming out today. All right, when I come back, we will do the Kiwi, the Aussie, the dollar index, the freaking strong, or the weak peso, strong dollar peso, and don't go anywhere. I'll be back. We got a lot of stuff to do before the CPI data. So thanks everyone. TGIF. All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. We got a lot to do still, so we need to get cooking. We need to go over to the Kiwi. So the Kiwi and Asian trade, we spiked up right to you notice we hit the 38% retracement to the T, and challenged the underside of that trend line, and here we are. We made that run, the one that we talked about yesterday, overshot it a little bit, and now we're just kind of sitting there. Now, oh shoot, I didn't want to keep deleting the wrong things. Here, let's get rid of that. We don't need that for right now. Okay, so here's the fib, high to low, 38% retracement to the pip, right? And gave us a little bit of a reversal. Now, right now you can see the hourly spikes are holding, which there's a lot of hourly spikes here, which I'm assuming this is a 38% retracement as well, which could end up being a bull flag pattern. It is. All right, so what that means is this is important support. Looks something like that, right? This could be a bull flag pattern, so just keep that in mind. That makes the overnight highs extremely important. All right. Now gold's bouncing, as like I said, intraday, gold can bounce from these levels. I mean, it makes sense. Hold on, I'm sorry, I'm just looking at something really quick. Yeah, Euro's getting a little lift here too. So what this could end up being is a bull flag. Now, so that what that also means is a break below today's lows, which is 72.90, should put some downside pressure on the Kiwi. 73.73 was the overnight high. 30. That's going to be key resistance, because if we can break above that, then that's going to put a bull flag pattern in play. Now, we are, in my opinion, we're bearish right now, but we can turn right back into a range today. I say we're bearish, and the reason why, just so you don't so you understand the longer term aspect of this. So we have this channel, right? This big channel we've been following for all year, pretty much, almost like the last year, and I say year, I mean calendar year, and we finally broke back below this trend line, which now puts the downside back in play towards 70 cents. Now the thing is the Kiwi's obviously holding up pretty well, because no one really wants to get too bearish the Kiwi while gold's still holding up. But if if gold cracks, I think it's going to take the Kiwi down. So that's what I think is holding up the Kiwi right now is actually gold, because everybody's like, well, why get really bearish on the Kiwi? Same with the Aussie. Why get bearish those currencies if gold's going to bounce, right? But if gold breaks down, then those currencies will probably take a hit. All right. But in the meantime, we are trying to hold up here. We are trying desperately, for longs. Now, if you go over to the wait, I already wrote down resistance. Aussie, the same thing. Okay, now the Aussie, we hit a 618 retracement. Let's remove that really quick. We hit a 618 retracement. Really struggled with that in Asia. We tried to take out, above that resistance. Asian trade last night, they were trying to push some of the Aussie and the Kiwi higher. So that means that resistance is very, very critical. Let's get rid of this for now. Although that is holding, but we're gonna get rid of it for now, and we're gonna do this. You know what? I guess we should just keep that line. It's really all so important. You can see it here. Okay. The way we break down here is if gold breaks down, right? And if we break here, it's because risk appetite's really strong, or maybe bonds are rallying and yields are falling. Okay, so 75, 25, 74, 90. That's a tight range, but 74, 90, 75. 25, right? Okay, and we are range bound in the Aussie. Now, one of the other things about the Aussie to keep in mind, the reason why we're range bound is because we're in this triangle, big triangle, by the way, massive. Trendline support's still holding, and that comes in around 74 cents. I mean, we really have to get below 74 cents for the Aussie to turn bearish. Okay. All right, because we're right in the apex where it's obviously very choppy waters and extremely nasty price action around here. Okay, let's go into the dollar index. Sorry, I'll go back to that just in case we get some alerts from the team. DXY. So here's your dollar index, right? 95.60, massive resistance. We're not going to take that out today. I mean, unless the inflation data shows like crazy inflation popping up, which again, that ain't happening. 95.65 is key resistance. I seriously doubt we take out that resistance today. I mean, we might probe it if we have an inline read, but where are we going to go here? I mean, this is the dollar caught before FOMC. We're caught. All right. Now support for the dollar is obviously down here at 94.80. Nothing's changed from yesterday. Same as the euro dollar. Okay. Look at crude bouncing like a bat out of hell. Crude was, by the way, really attacking support this morning, but this is really key support. Look, crude. I mean, you're right at 43. Here, let's get rid of some of this stuff. Get rid of that. I haven't looked at crude in a bit, so lines are a little messy here. Okay, so there's crude, right? I'm just noting it just because we were right off support and we bounced pretty aggressively. See, bam, right off support. I mean, that's big support. So you got shorts that said, all right, that's enough. Now the thing is I guess you got to watch crude here, because if crude does break, If crude breaks, that's going to be kind of gnarly, right? If we decide to break down. But wishful thinking, day like today, I don't see that happening. Okay, where was I at? We're looking at peso. All right, let's get over to the peso. So the peso, right up into major resistance, major. I mean, this rally that we've seen in the dollar peso, or the weakness to the peso, has been nothing short of spectacular. Okay, really spectacular rally. And I think most people are probably in the same camp. They're all thinking, there's no way we're going to break 1950, right? Everybody that's looking at the peso is like, no frickin' way. No frickin' way. No way. No way. Ain't going to happen. After this much of a rally, after 1820 to 19, that's a uh, 10,000 some odd pip rally, which is, it ends up being more like a, several hundred pip rally, in real pip terms, but still, there's no way. Okay, that's what makes it even that much more dangerous, because if we break 1950, it's gonna start squeezing like it's nobody's business, right? Because everybody, I mean, I look at it and I'm thinking, yeah, there ain't no way, right? There ain't no way. 1950, 150. Okay, so let me be a little bit more specific here. 50, 150. Like, there's no way it's going to break above that. And like I said, that's what's going to make it even that much more dangerous. If it breaks above that, it's going to go, Okay, support. Support, it doesn't come in all the way until 19. I mean, really, but there's got to be support ahead of that. So where does it turn where you go, okay, it's done, like it's finished? Probably somewhere down here. I would say somewhere down here. So if you decide to take it short, I'm sorry, did I say chi? If you decide to take a short, if you decide to take a short in the U.S. dollar Mexican peso, I would feel a lot more comfortable about it if you break below 1926. Okay, that's when you can go, stop stressing out. I see you. I see you. Okay, we're at the range. Range. How much time do I have? Okay. Let's go over to the Norwegian krona. So this Norwegian krona is probably about as annoying as anything. 820, 829. Okay, that's good. Our analysis hasn't changed. 820, 829. Sorry, there you go. 820, 829. Wait, what is this? Ooh. Hold on. Ooh. That's it, right there. Above 829, we're going to squeeze. Now, I would think that in order for that to happen, crude would have to fall and gold has to fall. That's just my take. Okay. We're in some really dangerous, like, ranges right now. Like, they could break it any direction. I mean, they honestly can. And remember, rates aren't going up ever in the United States as far as most people are concerned. So, like I said yesterday, why the hell is the dollar holding up so well? That's the question that most people are asking. 846, 854, same as yesterday. 8.46, 8.54. We're in a range. Okay, guys. So there is your bias chart is finished. Go ahead and take a picture. Let me see if I can take some questions. Equities.